Based on the historical data and forecast, Bitcoin shows a mixed trend with periods of consolidation and upward movement. The RSI values fluctuate between 42.4 and 63.6, indicating both oversold and overbought conditions. The Bollinger Bands have been widening and contracting, suggesting increasing and decreasing volatility. Considering these factors, I recommend a combined strategy leveraging RSI, Bollinger Bands, and support/resistance levels. We'll implement a strategy where we enter long positions when the RSI dips below 30 and the price is near the support level of $97,000. The initial entry price will be $97,000, with a stop loss set at $95,000 to mitigate potential losses. The target price for this trade will be $108,100, aiming to capture a significant portion of the upward trend. Furthermore, we will incorporate Bollinger Bands to refine our entries and exits. When the price touches the lower band and the RSI is below 30, we enter a long position at $101,700. The stop loss will be placed at $100,000, and the target price will be $108,100. This strategy combines the momentum of the RSI with the volatility signals of the Bollinger Bands and the stability of support and resistance levels to maximize potential returns while minimizing risk. The portfolio will prioritize the RSI strategy due to its clear oversold and overbought signals, with Bollinger Bands providing additional confirmation and support/resistance levels defining potential profit targets. Based on the historical data and forecast, Ethereum shows a strong upward trend, supported by the consistently rising forecast prices from $2,700 to $2,820. The RSI values fluctuate, but generally remain above 50, indicating bullish momentum. The Bollinger Bands also suggest a potential upward movement, as the price frequently touches the upper band. Therefore, I recommend a long position strategy focusing on capitalizing on this bullish trend. Specifically, I suggest entering a long position at $2,700, placing a stop-loss order at $2,650 to protect against potential downside risks, and setting a target price of $2,850 to secure substantial profits. To refine this strategy, we can incorporate RSI signals. When the RSI falls below 30, it signals an oversold condition, and when it rises above 70, it indicates an overbought condition. Given the current forecast and historical data, the RSI is not consistently in either extreme zone. However, if the price dips to $2,700 and the RSI is below 30, it presents an excellent entry point. The stop loss should remain at $2,650, and the target price can be adjusted to $2,820, aligning with the forecast price. This combined strategy leverages both the Bollinger Bands and RSI to maximize profit potential while minimizing risk. Based on the historical data and forecast, XRP shows a mixed trend with periods of consolidation and slight upward movement. The RSI fluctuates between 37.8 and 54.7, indicating both oversold and overbought conditions. The Bollinger Bands suggest periods of volatility, with the price occasionally touching the lower band, signaling potential buying opportunities. Considering these factors, I recommend a combined RSI and Bollinger Band strategy. First, we will implement a strategy that buys when the RSI falls below 20 and sells when it rises above 80. Second, we will implement a strategy that buys when the price touches the lower Bollinger Band and sells when it touches the upper Bollinger Band. To capitalize on these signals, I propose the following portfolio strategy. We will enter a long position at $2.06 when the forecast RSI is below 20. The stop loss will be set at $2, just below the recent support level, to limit potential losses. The initial target price will be $2.27, near the recent resistance level. If the price reaches the target, we will consider moving the stop loss to break even to protect profits. If the RSI rises above 80, we will enter a short position at $2.38, with a stop loss at $2.42 and a target price of $2.25. This combined approach aims to capture both trending and mean reversion opportunities, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, BNB has shown volatility within a defined range, bouncing between the 650 support and 673 resistance. The RSI fluctuates around 50, indicating a neutral market momentum. The Bollinger Bands suggest periods of contraction and expansion, reflecting the changing volatility. Considering these factors, I propose a combined strategy leveraging RSI and Bollinger Bands to capitalize on short-term price movements. The strategy will involve entering long positions when the RSI dips below 40, indicating an oversold condition, and short positions when the RSI exceeds 60, suggesting an overbought state. Specifically, let's initiate a long position on June 13, 2025, when the forecast price is $653. The entry price will be $653. Given the 650 support level, we will set a stop loss at $647 to protect against a potential downturn. The target price will be $667, aligning with the recent resistance level. If the RSI reaches 60, we will initiate a short position with an entry price of $667, a stop loss at $673, and a target price of $655. This combined approach aims to maximize returns by exploiting both bullish and bearish trends while managing risk through strategic stop-loss placements. Based on the historical data and forecast, Solana shows a recent downtrend followed by a slight recovery. The RSI consistently remains below 50, indicating a generally oversold condition, with a low of 32.8 on June 9, 2025. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential bounce. Considering these factors, I recommend a long entry at $153 with a stop loss at $144, coinciding with the established support level. The initial target price should be $160, aligning with the center of the Bollinger Bands and a reasonable price appreciation. To refine this strategy, we can incorporate an RSI-based exit. If the RSI reaches 80, indicating an overbought condition, we should consider taking profits. A secondary target price could be $168, the resistance level. This portfolio combines the oversold bounce strategy with Bollinger Bands and RSI confirmation, balancing risk and potential reward. The final target price is $168, and the stop loss remains at $144. This approach offers a high probability of success while mitigating potential losses. Based on the historical data and forecast, Dogecoin shows a volatile trend with periods of consolidation and minor upward movements. The RSI consistently fluctuates around the 40 level, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening recently, suggesting increasing volatility. Considering the support at $0.17 and resistance at $0.182, and the forecast price ranging from $0.179 to $0.186, I propose a moderate bullish strategy. We will enter a long position at $0.183, placing a stop-loss order at $0.17 to protect against a potential downturn. The initial target price will be $0.186, aiming for a small but consistent profit. To refine this strategy, we'll incorporate RSI signals. If the RSI dips below 30, indicating an oversold condition, we will enter a long position at $0.179, with a stop loss at $0.17 and a target price of $0.185. Conversely, if the RSI rises above 70, signaling an overbought condition, we will consider a short position, but given the current trend, this is less likely. The final portfolio will prioritize the long positions triggered by RSI oversold conditions, as they offer a higher probability of success given the prevailing market conditions. This combined approach leverages both trend analysis and momentum indicators for enhanced risk management and return optimization. Based on the historical data and forecast, TRON shows a generally upward trend, although with some volatility. The RSI fluctuates between 47.8 and 67.5, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening recently, suggesting increased volatility. Considering these factors, I propose a combined strategy leveraging RSI, Bollinger Bands, and support/resistance levels. We will initiate a long position when the RSI dips below 30, indicating an oversold condition, and the price touches the support level of $0.266. The entry price will be $0.266. To manage risk, the stop loss will be set just below the support level at $0.264. The initial target price will be the nearest resistance level of $0.275. To refine the strategy, we'll incorporate the Bollinger Bands. If the price approaches the lower band while the RSI is below 30, it strengthens our buy signal. If the price reaches the resistance of $0.275, we'll move our stop loss to the break-even level of $0.266 to secure profits. If the price continues to rise and approaches the upper Bollinger Band, we'll set a second target price at $0.285, anticipating a potential pullback. Given the forecast, which predicts a price around $0.279, we should be cautious and adjust our positions accordingly. The portfolio will be 60% based on RSI, 30% based on Bollinger Bands, and 10% based on support and resistance prices. This combined approach aims to capitalize on the upward trend while mitigating risk through strategic stop-loss placement and target adjustments. Based on the historical data and forecast, Cardano shows a fluctuating trend with recent downward pressure. The RSI consistently remains below 80, indicating that the asset is not overbought. However, the RSI has dipped below 30 on several occasions, signaling oversold conditions. The Bollinger Bands suggest periods of volatility, with price frequently touching or crossing the lower band, indicating potential buying opportunities. Considering the forecast for June 13, 2025, at $0.668, I recommend a long position. The entry price should be $0.668. The stop loss should be set just below the support level at $0.634 to limit potential losses. The target price should be $0.717, aligning with the recent resistance level and providing a reasonable profit margin. To refine this strategy, we'll incorporate RSI signals. If the RSI falls below 20, we will enter a long position at $0.655. The stop loss will be $0.634, and the target price will be $0.705. If the RSI rises above 80, we will avoid entering a long position. This combined strategy leverages both Bollinger Bands and RSI, providing a more robust approach to capitalize on potential price movements in Cardano. The portfolio will prioritize the RSI strategy, followed by the Bollinger Band strategy, and finally, the support and resistance strategy. Based on the historical data and forecast, Sui shows a mixed trend with periods of both upward and downward movement. The RSI consistently fluctuates between 32.6 and 52.9, indicating neither strong overbought nor oversold conditions for an extended period. However, the recent data shows an upward trend. The Bollinger Bands have been widening, suggesting increasing volatility. Given the forecast prices, which are mostly above the recent closing prices, and the RSI readings generally above 30, I propose a moderately bullish strategy. We will initiate a long position when the price touches the support price of $2.93. The stop loss will be set slightly below the support at $2.85 to mitigate potential losses. The initial target price will be $3.45, aligning with a recent resistance level. To refine the strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI dips below 20, indicating an oversold condition, we'll consider an additional entry at $3.15, with a stop loss at $3.05 and a target price of $3.45. If the price touches the bottom of the Bollinger Bands, which is around $2.96, it suggests a potential buying opportunity. We'll enter a long position at $2.96, with a stop loss at $2.88 and a target price of $3.45. The portfolio will prioritize the initial entry at $2.93, as it aligns with the established support level and provides a more conservative approach. The overall strategy aims to capitalize on the anticipated upward trend while incorporating risk management techniques through strategic stop-loss placements. Based on the historical data and forecast, Chainlink shows a fluctuating trend with periods of consolidation and upward movement. The price has consistently found support around $13.8, while resistance has been observed around $15.3. The RSI indicator fluctuates between 31.8 and 56.9, indicating periods of both oversold and overbought conditions. The Bollinger Bands have widened, suggesting increased volatility. Considering these factors, I propose a combined strategy utilizing RSI, Bollinger Bands, and support/resistance levels. First, I recommend initiating a long position when the RSI dips below 30, indicating an oversold condition. Specifically, enter a long position at $13.8. Place a stop-loss order at $13.5 to limit potential losses. Set a target price at $15.3, the nearest resistance level. Additionally, consider entering a long position when the price touches the lower Bollinger Band, which is $13.5. Place a stop-loss order at $13.1 and set a target price at $17, the upper Bollinger Band. For the forecast period, if the price breaks above $14.7, consider increasing the position size and adjusting the target price to $15.3. This combined strategy aims to capitalize on both momentum and volatility, providing a balanced approach to maximize potential returns while managing risk. Based on the historical data and forecast, DeXe exhibits a clear downtrend. The price has been consistently declining from 14.0 to a forecast of 7.98, breaching the support level of 7.33. The RSI consistently remains below 50, indicating a bearish sentiment, with values frequently dipping below 30, signaling oversold conditions. The Bollinger Bands are narrowing, suggesting decreasing volatility, but the price is consistently near the lower band, reinforcing the downtrend. Given these factors, I recommend a short selling strategy. Entry price should be 8.18, with a stop-loss set at 9.03 to protect against a potential short-term reversal. The initial target price is 7.33, coinciding with the support level. If the price breaks through the support level, the stop-loss should be adjusted to 7.96. The next target price should be 7.98, based on the forecast. This strategy combines technical indicators and price action to capitalize on the existing downtrend, managing risk with strategically placed stop-loss orders and aiming for incremental profits as the price declines. Based on the historical data and forecast, TRON shows a generally upward trend, although with some volatility. The RSI fluctuates between 47.8 and 67.5, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening recently, suggesting increased volatility. Considering these factors, I propose a combined strategy leveraging RSI, Bollinger Bands, and support/resistance levels. We will initiate a long position when the RSI dips below 30, indicating an oversold condition, and the price touches the support level of $0.266. The entry price will be $0.266. To manage risk, the stop-loss will be set just below the support level at $0.264. The initial target price will be the nearest resistance level of $0.275. To refine the strategy, we'll incorporate the Bollinger Bands. If the price approaches the lower band while the RSI is below 30, it strengthens our buy signal. If the price reaches the resistance of $0.275, we'll move our stop-loss to the break-even level of $0.266 to secure profits. If the price continues to rise and approaches the upper Bollinger Band, we'll set a second target price at $0.285, anticipating a potential pullback. Given the forecast, which predicts a price around $0.279, we should be cautious and adjust our positions accordingly. The portfolio will be 60% based on RSI, 30% based on Bollinger Bands, and 10% based on support and resistance prices. This combined approach aims to capitalize on the upward trend while mitigating risk through strategic stop-loss placement and target adjustments. Based on the historical data and forecast, NEXO shows a slightly upward trend, consolidating between the support price of $1.12 and the resistance price of $1.24. The RSI fluctuates, generally staying within the neutral range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show that the price is approaching the bottom band, suggesting a potential bounce. Considering this, I propose a moderately bullish strategy. We will initiate a long position when the RSI dips below 40, aiming to capitalize on a potential rebound. Specifically, I recommend entering a long position at $1.19. Given the recent price action and the forecast, a reasonable stop-loss would be placed just below the support level at $1.11. For the target price, we'll aim for the resistance level of $1.24, providing a potential gain of $0.05. This strategy combines RSI signals with Bollinger Bands and support/resistance levels to manage risk and maximize potential returns. The portfolio should allocate 60% to this strategy, 20% to a conservative strategy focusing on the Bollinger Bands, and 20% to a purely RSI-driven strategy. Based on the historical data and forecast, Quant demonstrates a generally upward trend, breaking through the resistance price of $116 on June 11, 2025, and reaching a high of $122. The RSI fluctuates between 53.7 and 68.4, indicating periods of both oversold and overbought conditions. The Bollinger Bands have widened, suggesting increased volatility. Considering this, I recommend a long position strategy. We will enter a long position at $115, placing a stop-loss order at $106 to limit potential losses. The initial target price is set at $126, based on the upper Bollinger Band and a reasonable profit margin. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the price dips and the RSI falls below 20, we will consider an additional entry at $96 with a stop-loss at $85 and a target price of $115. Conversely, if the price reaches the upper Bollinger Band and the RSI exceeds 80, we will consider taking partial profits. This layered approach, with the primary long position at $115, allows for capitalizing on both upward momentum and potential pullbacks, maximizing returns while managing risk effectively. Based on the historical data and forecast, BNB has shown volatility within a defined range, bouncing between the 650 support and 673 resistance. The RSI fluctuates around 50, indicating a neutral market momentum. The Bollinger Bands suggest periods of contraction and expansion, reflecting the changing volatility. Considering these factors, I propose a combined strategy leveraging RSI and Bollinger Bands to capitalize on short-term price movements. The strategy will involve entering long positions when the RSI dips below 40, indicating an oversold condition, and short positions when the RSI exceeds 60, suggesting an overbought state. Specifically, let's initiate a long position on June 13, 2025, when the forecast price is $653. The entry price will be $653. Given the 650 support level, we will set a stop-loss at $647 to protect against a potential downturn. The target price will be $667, aligning with the recent resistance level. If the RSI reaches 60, we will initiate a short position with an entry price of $667, a stop-loss at $673, and a target price of $655. This combined approach aims to maximize returns by exploiting both bullish and bearish trends while managing risk through strategic stop-loss placements. Based on the historical data and forecast, Bitcoin Cash exhibits an upward trend, consistently testing and bouncing off the support price of $409. The RSI values have fluctuated between 43.5 and 62.6, indicating periods of both oversold and overbought conditions. The Bollinger Bands show that the price is currently trending towards the upper band, suggesting bullish momentum. Therefore, my strategy is to implement a long position when the RSI falls below 20, and take profit when the RSI reaches 80. Specifically, I recommend entering a long position at $419, with a stop-loss order placed at $409 to mitigate potential losses. The initial target price would be $437, aligning with the forecast and the upper Bollinger Band. To optimize the portfolio, I will employ a layered approach. After reaching the initial target of $437, I will move the stop-loss to the entry price of $419, securing partial profits while allowing for further upside potential. Subsequently, I will set a second target price at $434, based on the forecast. This strategy combines RSI-based signals with Bollinger Band confirmation and support/resistance levels to maximize potential returns while managing risk effectively. This approach balances the need for aggressive gains with a robust risk management framework, which is crucial for high returns investment. Based on the historical data and forecast, PancakeSwap exhibits an overall upward trend, supported by the recent price action and the projected prices for the next week. The RSI values fluctuate, but generally remain within a range, indicating neither extreme overbought nor oversold conditions. However, the forecast prices consistently above the recent close prices suggest a potential for further gains. Considering the support price of $2.43 and the resistance of $2.63, we can implement a strategy focused on capitalizing on short-term price movements. I recommend a combined strategy utilizing RSI and Bollinger Bands for optimal returns. Initially, we will enter a long position at $2.48, slightly above the first forecast price, anticipating a continuation of the upward trend. A stop loss will be set at $2.43, just above the support level, to limit potential losses if the price reverses. Our initial target price will be $2.63, the resistance level, aiming for a quick profit. If the price reaches $2.63, we will re-evaluate the situation. If the RSI is below 80, we will set a new target price of $2.69, the middle of the Bollinger Bands. This combined approach leverages both momentum and volatility indicators to maximize profit potential while managing risk effectively. Based on the historical data and forecast, Kava shows a mixed trend. The price has fluctuated within a range, with the support price consistently at $0.385 and the resistance around $0.432. The RSI indicates periods of oversold and overbought conditions, suggesting potential for price reversals. The Bollinger Bands have been narrowing recently, indicating a period of consolidation, and the forecast suggests a slight downward trend in the short term. Therefore, a conservative strategy focusing on short-term price movements is recommended. Given the current conditions, I suggest a short selling strategy when the RSI reaches above 70, and a long buying strategy when the RSI reaches below 30. For the short selling strategy, when the RSI is above 70, enter a short position at $0.45, with a stop loss at $0.46 and a target price of $0.42. For the long buying strategy, when the RSI is below 30, enter a long position at $0.403, with a stop loss at $0.39 and a target price of $0.42. This portfolio combines both strategies to maximize potential returns while managing risk. Based on the historical data and forecast, PAX Gold shows a generally upward trend, consistently testing and bouncing off the support price of $3,350. The RSI indicates periods of both overbought and oversold conditions, with recent values trending towards overbought territory. The Bollinger Bands have been widening, suggesting increased volatility and potential for price swings. Considering these factors, I propose a combined strategy incorporating RSI and Bollinger Band signals. We will initiate a long position when the RSI dips below 20, aiming to capitalize on the bounce from the 3350 support level. Specifically, we'll enter a long position at $3,350, placing a stop-loss order at $3,330 to limit potential losses. Our initial target price will be $3,400, aligning with the upper Bollinger Band and a reasonable profit margin. If the price reaches $3,400 and the RSI remains above 80, we'll adjust the target price to $3,450, anticipating further upward momentum. The combined strategy leverages the support and resistance levels, RSI for identifying oversold conditions, and Bollinger Bands for gauging volatility and potential price movements, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Kaia exhibits a clear upward trend, particularly evident in the recent price surge and consistently positive forecasts. The RSI consistently moved above 30, indicating a bullish momentum. The Bollinger Bands are widening, suggesting increased volatility and potential for further price movement. We will implement a multifaceted strategy combining RSI, Bollinger Bands, and support/resistance levels to maximize potential returns. The primary strategy will be a trend-following approach, capitalizing on the upward momentum. We will enter a long position at $0.146, coinciding with the first forecast price and a reasonable retracement after the recent peak. A stop loss will be placed just below the support level at $0.107 to mitigate potential losses if the trend reverses. The initial target price will be set at $0.185, aligning with the forecast price and a significant gain from the entry point. To refine this strategy, we'll incorporate Bollinger Band signals. If the price touches the lower band, it indicates a potential oversold condition, reinforcing our entry point. Conversely, if the price approaches the upper band, it signals a potential overbought condition, prompting us to consider taking profits or tightening our stop loss. We will adjust our target price to $0.19, the final forecast price, to capture the full potential of the upward trend. This portfolio combines the strengths of all three strategies, providing a robust and adaptable approach to trading Kaia. The overall strategy is a long position with an entry price of $0.146, a stop loss of $0.107, and a target price of $0.19.